All right, hello. We are looking at this as student view right now, and we are going to go into chapter 12, and we are going to do our problem assignment. All right, remember, just go here, click that arrow, click begin, click continue, and you're going to have, we have 18 questions in this one. Don't be dismayed. They're not that horrible, okay? Looks like, let's see if 11's, okay, okay, so that's a multiple choice. Okay, so let's look at this. Steffi and Lay form a partnership. Steffi invests $1,400 cash, 2,800 supplies, inventory market value 3,400, machinery of 4,400 per pair. Partnership journal entry records Steffi's investment. Okay, so this is pretty straightforward. It's just like any other investment. Let's go ahead and do a debit for the assets. We got cash of 1,400. We have supplies inventory, or supplies, just supplies. And then we have inventory. So let me scroll down a little bit there so we can see this. And inventory was 3,400. Remember, we do market value for this. And then we had machinery, I think. Yeah, for 4,400. 4,400. Then we're going to credit Steffi's capital for the total amount here. So let's go ahead and whip out our calculator. And we're going to go 1,400 plus 2,800 plus 3,400 plus 4,400. Steffi should get $12,000. Simple as that. Pretty straightforward, hopefully. If you have any questions on this one, let me know. Okay, let's go ahead and go to the next one. Oops, I don't need to scroll. All right. Radmer and Cox began a partnership by investing $56,000 and $84,000 respectively. During its first year, the partnership earned $175,000. Prepare calculations showing how the $175,000 income is allocated in each separate plan for sharing income and loss. Okay, this is one part of three. So if they didn't agree, it's got to be equal. Even though if it doesn't necessarily need to say that it's going to be equal, but we know it is equal. So we're going to take that 175 and we're going to divide that guy by 2. So each one's going to get 87,500. Check that work, make sure we're good. Rock on, we're good. Let's go to the next one here. Okay, so this one we're going to allocate based on their initial investments. Okay, so let's go ahead and rip out our calculator here. Raymer and Knox began the partnership. They both invested $56,000 and $84,000. Okay, so we're gonna add those together, and we're gonna add 84,000. So we have a total of $140,000 in equity. So we're gonna take that 50. I'm gonna do this and dropping the 3 zeros. Don't get confused. 56,000 divided by that 140. So it looks like Raymer, fraction to allocate to Raymer is 40%. It has this drop down. Oh, it wants me to calculate it. Okay, fine. 56,000. This is weird. Okay. I just calculated. You saw it's 40%. Raymer's share of the income. We're going to take Raymer. Let's see. Raymer was 40%. So we're going to multiply. Oops. We're going to multiply that by that 175. So it should be 70,000. Okay. And then we're going to come over here to allocate to Knox, and it's 84,000 divided by 140. And we conclude that it's 60,000, and that should be correct. So 0.6 times 140, 84,000. Why? No, I didn't do that right. 175 times 0.6. I was say, wait, that was the same thing as I just calculated. Okay, so we got 105,000. Let's check our work here, and we should be good to go. Very good. All right, next one here. All right, so if you happen to have made the, here's my model I made in the video for the homework. We're going to see if this works, okay? Let's see, we have Raymer and Knox, so we're going to name them here. Raymer and Knox, okay? Let's see their salary amounts. Well, let's not worry about that yet. Their capital balances are Raymer has 56,000 and Knox has 84,000. They earned 175,000. Okay, each of the plan. Okay, the partners agreed to share income by giving 53,000 salary allowance to Raymer and 43 to Knox. 10% interest. So let's go ahead and do 10%, and then the remaining balance was equally. Okay, so hopefully we just did the work and we didn't have to worry or reinvent the wheel or anything. Okay, because we made this model. So let's come over here and I'm going to split this so we can see both at the same time. No, I really wanted to see that. Please back. Okay. All right. So net income, 175,000. Salary to Raymer is going to be 53,000. Knox is 43,000. Interest allowance. Let's just scroll this down so we can see all of that. Interest allowance is 5,600 and then 8,400. And then balance is shared equally. And 32.5, 32.5. Oh, balance of income was 65,000, so they wanted us to do that. Okay, there we go. All right. Let's check our work on that. Look at that. Look at that. If you created the model I gave you guys in the snippets video, you just did the homework so easy because it's all there for you. Okay. Definitely a benefit of doing those videos. So if you're interested, please go and watch that video. Look at this, another one. Let's do it again. This makes it easy, okay? And it's basically Mike and Rachel. Okay, it's basically the same stuff we taught you in the video. And so really go watch that snippet video, and this is going to come to you, okay? Because this is really how life is in the accounting world. Is we make these models and we use them. And if you're able to make these models, then you are able to understand what's going on and how this. So I think I'm pretty good with that. So Mike invests 54,000, okay, and Rachel 74,000. Mike gets a salary allowance of 54,000 and 74,000. Okay, now salary allowance is 5,000 per year. That's skimpy, okay, and Rachel gets 10,400. Both get annual interest at 12%. Oh, my journal entry still has my name. See, that's why I shouldn't have put B Smith Capital down here in this. I should have put, well, don't worry about it. Anyway, it still works. So, let's see. They both get annual interest at 12%. Their initial investment amount shared equally. Net income for the year is 44,000. Okay. So we can see here that Mike gets 18.1. There's a withdrawal statement, so I wonder if we're going to need to. Yeah, I think we're going to need to. Initial partnership investments. Okay, so we got that up here. Capital balance is up there, so we're going to put 54,000 and 74,000. Okay, our net income. All right, so our first one here. So we're allocating based on salary. Let's pick out salary allowances. Mike's supposed to get 5,000 and Rachel 10,400. Next is the percentage or the interest on capital balances. Interest allowances. So 64,800, 88,80. And the last is the remaining allocated based on equal shares. I guess it's balance allocated is what they want. And that's going to be 66.20 each. Less partners withdrawals. Did Mike withdrew and Rachel withdrew, so they both do. So Michael withdrew 2,400 and Rachel withdrew 3,400, and then this is going to be the ending capital balances. So let's check our work. I may have screwed up some of those. Yeah, look, it all did good. I thought maybe I messed some of these up, like what they wanted it called or whatever, but you get the point. Our model worked again. Okay, our model worked again. What a wonderful thing, right? It's nice to see that happen. Yeah, we create these models, they work, and that's kind of what we want. We want these models to be efficient. We want them to work for us. So, All right, let's move on here. I'm going to go ahead and just maximize this now so that I want you to go away, please, so I can see things. Okay. All right, record the admission of Brittany as a partner who will pay Mandy $93,600 for her share of equity of $117,000. Okay, this one's hopefully pretty straightforward. We're going to take, we're going to get rid of Mandy capital for 117. Now, maybe the full amount that Mandy had, we don't know, but Brittany's coming on, and we're just going to put in that 117,000. Okay, so it looks like Brittany wanted out, right? Brittany was like, "I want out of here. I'll pay. You can pay me less money for the amount I have." So that's what Brittany's doing. Mandy's out. Brittany wants in. So they're trading capital balance, and Mandy is basically getting a bonus in the amount of the difference between the 117,000 and the 93,600. So let's go ahead and check our work, and we look good. Okay, so in this situation, it looks like we're going to be recording some different situations here. The first one, let's go ahead and read this. The Struder partnership has total partners equity of $360,000. It's made up of main capital in that amount, Frist capital. There's two people there. The partner sharing net income. Okay, there it is. On November 1st, Addison is admitted to the partnership, given a 20% interest in equity and a 20% share in any income and loss. Okay. All right, so we're going to prepare the journal entries to record this. Record the admission of Addison, number one, with an investment of $90,000 for a 20% interest in the equity and a 20% share in any income and loss. All right, so let's go ahead and do this real quick. So remember from the lecture, we want to total up our capital amounts to find out what this contribution of $90,000 is going to do. So we have $360,000. We're going to add $252,000. Okay, that's going to give us a total of $612. But we're adding $90,000 to it. So that is our total capital account. So we're going to multiply that by 20%, $140,000 and $140,400. So our general journal here with that entry should be cash for $90,000, and then Addison capital for this. Wait, what was it that we calculated it? No, I think it sharing income equally loss. Okay, check our work. I think I flipped that. Okay, it's not complete. No, I didn't screw it up. Okay. Yeah, that's I was trying to figure out why that worked that way. Oh, it's because I totally calculated it wrong. Main is 252. Frist is 108. Sorry for that mess up. 360,000. Add the 90,000. Multiply that by 0.2. Yeah, there's the 90,000. I knew it was. I had. Yeah, that was kind of weird. I apologize for that. I did the wrong calculation. I added 360 when that was the total amount. I knew it was supposed to be 90,000, but that was kind of confusing. Okay, so hopefully you got that. We added the total amount, which was the 252 and the 108 to get to 360,000. Add in the 90,000 multiplied by 0.2. That I knew it because the first one's usually the one that's straight across. Anyway, I apologize. I see accounting's mess up too. We just kind of know how to figure out what we did wrong. Anyway, all right, so let's go back to the journal entry. Let's look at number 2. In this case, we're still getting 20%, but we're investing with 125,000. This time, I promise you, I will do the math correct. So let's look up here. Here's our calculator again. We are going to take that 360, taking 360, and we're adding the 125,000 to it. We're still only giving them 20%. So they're getting $97,000 worth of equity, okay? So we're going to debit the cash for 125,000, and then we're giving Addison capital, was it 97,000? Yeah, 97,000. And so The remaining amount, partner share, 50/70. My belief is that we are going to take 83% to main capital of the remaining amount. So let's do main capital and then wrist capital, I think it was. Yeah. So main gets 83% of the remaining amount. So we have 97. Sorry, that should have been right here. So 125 minus 97, and it was times, I'm sorry, 0.83. Yeah, 0.83 or 83%. 0.83. So Frist is going to get, I'm sorry, Maine is going to get 23,240. 23,240. And then we're going to take that, add it to 97,000, subtract 125. I hate when I do that. I hate when I double tap. Yeah, sorry. For some reason, my Zoom thing popped up. I think it's jealous because I'm doing this in another application. It's like, no, don't forget about me. Don't forget about me. All right. So 125 minus 97 minus 23.24. All right. So we 4,760. If I can get back into this. God, I'm hoping this is still recording. Yeah, it's still recording. Good. Sometimes my computer just starts to wig out. I've got this spinning wheel of death on me now. 4,760. 4,760. Let's go. Come on, computer. Oh, good. Just what I needed. I'm going to pause this. Oh, no, there it went. Okay. Or not. Yeah, I'll pause it until it pops open. All right, we're back in finally. So 4,760. Let's check our work. All right, we're good. So let's go now to the last one. In this case, we have 60,000 we're allocating. So we are going to have a situation where we're going to have to calculate a reduction from the other partners. So we have 360 plus 60 for a total of 420,000 times 0.2. So we're going to be allocating 84,000 to Addison. So we're getting $60,000 cash, 84,000 to. Whoops, we don't want to do that. Actually, I'm screwing it up already. 84,000 to Addison Capital. Addison Capital. Okay, we're going to debit cash. That's what we're getting. And then we're going to debit the other two capital accounts. Well, let's start with Maine. Maine's sitting at 83%, and it was loss too, right? Yep, income and loss, 83 to Maine. We're going to take 84,000 minus 60,000 and multiply by 0.83. Thank you, by the way, McGraw-Hill, for that 83%. That's really weird. 19,920, 19,920. And then we're going to debit the Frist capital account for the remaining balance. Let's hope my computer doesn't freeze again. $4,080. $4,008. Come on, keyboard. There we go. All right. Let's check that work. We're good. Perfect. Everything's good with that one. All right. Let's go with the last one here. Looks like, okay, we got 3 partners this time. Partners decide to liquidate the partnership. Immediately before liquidation, the partnership balance sheet shows all of this. Liquidation resulted in an $83,000 loss. This ought to be fun. All right, I'm going to pull up our spreadsheet again, except I'm going to give me another tab. And let me zoom in so we can see this, because we're going to want to go ahead and calculate this better than what we're going to do if we didn't. Okay, so we have Turner, Roth, and Lowe. Well, maybe they're going to walk us through it here. Allocation of gains and losses. Let's see it. Let's give them the benefit of the doubt. Maybe they're going to walk us through it, and I don't need the Excel spreadsheet. All right, let's allocate the loss to the partnerships. Okay, immediately before liquidation, the partnership balance sheet shows assets, liabilities, Turner Capital, Roth Capital, and Low Capital. Liquidation resulted in an $83,000 loss. Okay, well, what are they allocating it based on? 20, 30, and 50. Well, today it sucks to be low. All right, so low's getting 50%. Looks like 50% of the loss of 83,000. So, oh, this is for Turner. Turner was our 20%. Yeah. So 2/10. Roth is our 3/10, and low is our 5/10, or 1/2. I don't know why they do 5/10. That's kind of silly. But 3,500 times 0.2, not 25. 700 is allocated. You might need to make sure this is put in as a negative amount. I don't know if I know I'm just doing this, so I don't know if they're going to want it as a negative or not. Let's do this. Where's my calculator? Oh, wait, that's not right. 3,500. That's the allocate. I need 83,000. What am I doing? 83,000. Sorry, times 0.2. That's better. Let's say I thought 700 was 16. 6 was a little bit better. All right, what's 30% of 83? 24,900. 24,900. And then we have low, who gets 50% of this sweetheart. 41,500. Boy, we are hurting. Capital balances after this. 16,600 minus 35. 13,100. And then we have 14,500 minus 24,900. I'm doing them different ways of calculating. Either way, it doesn't matter. What was that 10,004? As long as you know which way on the number line you're on, it doesn't matter. 9,500. All right, let's see if we did this one right. I always get nervous sometimes. I'm like, oh, what if I get it wrong? Oh, well. All right, so what do we got to do? Determine how much each partner should contribute to the partner to cover any remaining capital deficiency. It's easy. It's whatever the negative is, 13,100. So Turner needs to do, Turner needs to add 13,100. Roth needs to donate 10,400. And low, 9,500. Okay. Check our work. Okay, we're good. We're complete. We're done. We click submit. We're done with the assignment. If you guys have any questions on this, please let me know. Otherwise, we'll see you probably in chapter 13. Have a good one. Take care. Just kidding. I don't know if you can still hear me or not, but this isn't the video one with the word. I almost forgot I have to do the word, but my computer froze again. Now, except this time I can't get into my record to stop this. So I don't know. Sometimes I wonder why my computer doesn't like me. Or maybe I can find a way to clip this if it's still recording. Can't even mute myself.